Now, here's your host, Dan Celia.
Good morning. Welcome back to Financial Issues. My name's Dan Celia. It's great to be here. And we've got a little bit of economic news that came out this morning. Of course, the job numbers came out. The job numbers up a little bit higher than was expected. They were looking for a total first-time unemployment claims number of about 330,000, and we got 326,000. That's up 1,000 from last week. There is, according to the numbers that just came in this morning, 1.35 million people as of the end of December lost their extended jobless benefits. That's 1.35 million people. That's an awful lot of people entering into the workforce. Now, that being the case, those folks entering into the workforce, one would assume that at least half of them will be applying for jobs this week or last week or the week before, which means the unemployment rate should go up significantly. We'll wait and see how that gets manipulated. But the fact of the matter is, there is some numbers coming out of BLS that actually confirm something that I've been talking about for an awful long time, and that is these jobless unemployment rate numbers are pretty much a joke and don't correspond with what the real numbers show. I even got some information, which I'm going to be writing about, but I even got some information in reference to the highest percentage of people that are out of work. And here's a surprise. They're not people above the age of 62. If you go to 65, it's even lower, but it's not that age group at all. Well, wait, I thought they all retired. Well, not according to these numbers. So we'll get a look at that, and I'll give you some of those numbers. Of course, we have existing home sales coming out. Existing home sales numbers will be coming out at 10 o'clock, so we'll watch that. We'll look for that. 866-300-9298 if you've got a question. Feel free to pick the phone up, dial in, ask your questions. It's a great time to do it. 866-300-9298. So we'll hope that you will do that. Very interesting coming out of Davos today. Davos, the economic summit, which is really not much of a summit. It's pretty much a self-serving place, conference, time, when everybody can talk about, what they feel is best for them, themselves, their company, but mostly themselves. Jack Lew's there, of course, the U.S. Treasury Secretary. He's talking to CNBC. I've got some notes on that. I found it very, very interesting. I did see the conversation, didn't hear it. Very, very interesting, and I'll talk about it after we get to a couple of the clips. But anyway, he is one of the people speaking out. Of course, we know what he talked about, and maybe you don't. Deficit ceiling. February 7th. We got to make a vote to raise the debt limit, or the borrowing or printing money capacity of the United States of America. We've got to tick it up $1 trillion or so that we can continue the spending spree that we've been on. Now, it's not looking like, I can't imagine there's going to be any resistance unless sometime between December 30th and February 7th, the conservatives grow some sort of a backbone. Not likely to happen. Don't count on it. So we will likely see an increase in the debt ceiling limits, the legal limit by which the government can borrow. We're likely to see that. So that means we can continue the spending spree that we've been on. We've already approved another $1 trillion worth of spending. So we'll be able to do that with ease. China's manufacturing sector registered a very unexpected contraction for the month of January. That's not good news. European stocks reacted immediately, and we saw the factory data contraction show up in European stocks first. The China manufacturing sector unexpectedly contracted in January, as I've already said, and it went from 50.5 to 50.3. That doesn't sound like a lot, but it is trending in the wrong direction. So, not good news. It could be good news for us individual consumers at some point in time. Because what it could mean, I'm just saying could mean, is that we've got lower gas prices headed into the spring. When we see manufacturing in China decrease, that means demand for energy in China is going to decrease. Their manufacturing, of course, heavily dependent upon fossil fuel, and we're going to see that diminish. That means inventories are going to go up. Global inventories of energy are going to go up. That should reflect, and hopefully, a reduction in price at the pump. So that could be good news for us. Now, here's the thing. If China is reporting this contraction somewhat in their manufacturing sector, it's a lot worse than what they are reporting because it's communist China. They stretch the truth a bit. In other words, they can say whatever they want to say. So if they're indicating this contraction, it's probably a lot worse than what it really is. So, what does that mean? Well, that means that we're not going to see energy usage pick up anytime soon, and it could be a lot worse than we think. We've got to be concerned about the Chinese economy because it could lead to some unrest, particularly for Japan from China, and we don't want anything like this to lead to a war. Remember, China's got to wake up every morning. The dictators in China wake up and say, hey, man, we got to create 8 million jobs today. Why? Because they're trying to keep off a revolt from the people. Very difficult thing to do. So it'll be interesting to watch that. I'm not saying this is not a long-term trend. This is a trend for 2 months. Is it going to last, indefinitely? Who knows? It's not likely to go for 4 or 5 months, but if it does, look out. Eurozone business activity picked up. I wish our business activity would pick up significantly, but the Eurozone activity has picked up. Very, very interesting. That's good news for the Eurozone. 866-392-98. So Jack Lew, speaking at Davos in reference to the economy, he first said this, talking about Congress. Go ahead, Devin.
I wrote to Congress yesterday to let them know, consistent with past communications, that we thought that it was most likely the end of February that we would run out of our ability to use what are called extraordinary measures to continue borrowing, which means that Congress needs to act. They should act as soon as possible.
They should act as soon as possible, and they will. He also goes on to talk about this from his conversations with both parties. Again, interesting, and then I'm going to comment on it. Go ahead, Devin.
I'll tell you, from my conversations with leaders of both parties, I think they know what they have to do. I think they know that it was not a good thing to create the kind of economic anxiety that was created just a few months ago. We're doing pretty well in the U.S. economy right now. We've got some tailwinds. We're seeing the year ending strong, beginning strong. They've already incurred the obligations. Just this last week, they passed a spending bill. Right. That sets in motion the policies for the next year. It's a template for the year after that. The debt limit borrowing authority is really just the act you take at the end to reconcile the other decisions you've made. It's not new policy.
Well, I kind of agree with that in one sense. They've already passed the spending bill. So he said that kind of sets the tone. It doesn't set the tone. In fact, what it does is it commits to the fact that you have to, you're not going to pass $1 trillion more spending without thinking in your minds. I wouldn't think they're this dysfunctional. They might be. Without thinking in your mind that obviously you're going to pass the debt ceiling limits on February 7th. I mean, it's kind of, talk about showing your hand and losing any leverage that you might have. Well, they did that when they passed the budget. You can't pass the budget of $1 trillion worth of spending without any cuts to offset that and expect the government not to be able to spend what you just passed, saying that they could spend. But the very interesting part, and it's not in that clip because it goes back a little further, it's a little bit longer, but in the conversation, as he talked about the economy, it's got headwinds, we had a good year last year, it looks like all things look like it's going to be a good year. What he stated and what he said about the future of the economy for the year 2014, before you get all excited that Jack Lew thinks everything's going to be great, is that forecasters are forecasting a stronger economy in 2014. Let me just say, I can't remember the last time the forecasters were right. The economy, they can't even talk. They haven't been right on what the first-time unemployment claims are going to be yet, or the job numbers, or any part of the economy. Is he basing the fact that the 2014 economy ought to be relatively strong? Is he basing that on? Could it be that he's basing that on that it's, the predictions? Really? Are you basing it on good, solid economic data? Or are you placing that on predictions? Well, it's a nice soundbite, as he said it very, very quickly. But, of course, nobody challenged him and nobody would pick that up. But according to Jack Lew, a couple things are going to happen. We're going to get our deficit, our legal limit of printing, or our legal limit of borrowing increased so that we can quickly head on the way to $20 trillion worth of debt. That looks like it's a given. That's going to happen. Make no mistake about it. You don't pass a $1 trillion spending bill without knowing that you've got to pass on February 7th the $1 trillion at least increase in the deficit ceiling. He's talking about that alone, that they passed that bill, is leading to economic policy. Really? I guess. We don't have economic policy. We've never had economic policy. We went 14 straight budget cycles without passing a budget. We don't have what economic policy? He's living in some kind of fantasy world if he thinks anybody in Washington has got some kind of economic policy. 866-300-9298, 866-300-9298, 866-300-9298. We're going to get to the phones. We're waiting for 10 o'clock Eastern time. We'll see the existing home sales numbers, mortgage rates, and those kinds of things. That'll be very interesting. That is the next piece of economic news that we have coming out today. Tomorrow, we get some construction spending numbers, and then that's about it. We're getting a lot of earnings reports. Logitech, Logitech, if you are a partner with me on the website and you own Logitech, and if you are particular one of those people that called me, emailed me, or said, I'm thinking about selling my Logitech, it's really taking a dive. And I said, hang on to it. Don't worry about it. I said that to many people. I hope you all listened and hung on to it. If you did very well this year, and it looks like you're going to do very well next year. So Logitech had a sharp earnings report. Very good. And I'm sure today it's going to be on fire. 866-300-9298. The earnings reports in stocks dropped based on earnings that we've had here in America, along with earnings in Europe. Right now, the European stocks headed downward again, and it looks like we are scheduled for a negative open. The Dow closed down 41. We love those 40s, but we're down again in the 40s. 41 yesterday. The S&P was up 1. So not a lot of movement except on the downside yesterday on the Dow, and it's scheduled to open down this morning. We'll be right back after this.